So in this video, we're going to talk about credit cards. A lot of people have the impression that credit cards are toxic and that you got to stay away from them and not get into credit card debt. And it's a topic that has strong reactions from people. But I think credit cards, just like most things in life, have benefits and they have drawbacks. So I think let's start talking about credit cards in that context and talk about both the pros and the cons of them. Okay, so let's start with the pros. So credit cards are a really convenient form of payment. So, instead of carrying a bunch of cash around, carrying one credit card will give you access to be able to pay for just about anything that you're going to encounter in your everyday life. Not just in person when you're at a store or a restaurant, but also just buying things online. A credit card is going to be universally accepted as a form of payment. So it just gives you access to be able to purchase things, goods and services, both in the real world and online. And so yeah, even using it as a means of getting money into a online wallet, like PayPal or something, you can use a credit card to do that. So the fact that it's so widely accepted is a big pro. It's also a good first step to establishing your credit history. So, opening a credit card, there's not that many barriers to opening a credit card, even for someone that doesn't have any credit history. You just won't get approved for like a large limit, but you will be able to open a credit card even as an 18-year-old. With just starting off in your financial life. So for this fact, it's often the first place person starts to establish their credit history by opening a credit card. Credit cards also offer cash back and other rewards. So a typical kind of rate that's offered is 2% cash back. So for every $100 you spend, the credit card will accumulate $2 uh, on your behalf as a kind of reward for using the credit card. So it's kind of giving you a discount on all your purchases by whatever the percentage is. And the way that they can afford to do that is because, for one, they charge the merchant a fee for accepting your credit card. So if you spend $100, they may charge let's say you go to Target and you spend $100 there, they're going to charge Target a fee for basically paying them through the credit card network. And so they're essentially giving you some of that fee back. And also, they want to encourage you to use a credit card because many people will use a credit card and then they will basically have a balance left over that they're going to pay interest on. So the credit card company makes money not just from the fee that they're going to charge the merchant, for example, Target or Walmart or wherever you're shopping, but they're also going to charge you interest if you maintain a balance on the credit card. So the cashback and the rewards are ways to entice you to just use the credit card more. And the rewards are actually really nice. You can get, for signing up for a new credit card, some of these cards will offer you, the equivalent of $1,000 or $2,000 just to sign up and start using the card. Of course, they will force you to spend, maybe $5,000 or whatever it is in the first 3 months of getting the card to get the rewards. But if you're smart about it, you can potentially uh, use the credit card rewards to your advantage if you can do it in a responsible way. And we'll have, maybe some other video on kind of how to explore that whole world of credit card rewards. Okay, so credit cards also have fraud protection. So, for example, they're protecting you against someone stealing your credit card number and using your card without you knowing. So you're kind of protected against that risk. They also have a lot of built-in insurance in the credit card. For example, if you rent a car, with using your credit card as payment, then you get basically insurance on the rental. Also, if you book travel, for example, with your credit card, many credit cards offer some kind of trip cancellation insurance. So it's actually worthwhile to read through the information that comes with the credit card to see all these kind of perk benefits that you get. Also, the fraud protection, not only against the credit card fraud, they have some credit cards offer kind of like identity theft protection that's just included with the card. So it's worthwhile again to review all the kind of fine print that comes with your credit card, because you'll be surprised. There's actually some pretty cool stuff that comes with the credit card, as long as you use the credit card to make certain purchases. Like for example, if you buy electronics, some cards will offer like a free extended warranty. So it's worthwhile for you to kind of know what those are, so that if something happens, you can avail yourself of these included protections that are built into the card. So this is something that I've read about. I've not done this myself, but a lot of, or rather, there are some small business owners who have used credit cards as their first venture capital. So basically, if they have a small business and they are having no access to funds to start the business, uh, people will often use their credit cards as a means of kind of launching their business, be it buying inventory or buying services that they need to start their business. They will use the credit card, but I think this is pretty risky because the credit card interest rates are really high. So, one way to mitigate this is if you have a good credit score and a lower or relatively lower interest rate on your credit card. This may be a worthwhile strategy if you're starting a small business and you need access to capital. But you should do it. You should do it only if you're sure that you're going to be able to pay back the loans, or with some reasonable level of confidence. Because again, the credit card debt, the interest rates are typically pretty high and can accumulate quickly if you're relying on them as your main source of capital in a small business. The credit cards are also pretty helpful in tracking your spending because they organize your expenses by, they'll track your expenses in one place. Some of them even organize the purchases into categories in a report that you can kind of produce from your credit card bill with the online kind of services that that most of them offer. So it's a good way of tracking your expenses and kind of using it as a tool in your budgeting. Okay, so let's talk about some of the drawbacks. So I've mentioned this just previously. The high interest rates can make it hard to dig yourself out of debt once you're in it, because if you're paying 20% interest on a loan from a credit card, and you can only afford to make kind of smaller payments, you're just always just going to be paying off interest. You're never gonna break into paying off principal unless you can make bigger payments. So um, yeah, so the high interest rates are a big kind of con. They're typically much higher than other forms of borrowing, like borrowing money from a mortgage, or even a home equity line of credit. So if you own a house, even if you have a mortgage on it, you can still get a second mortgage basically, and the rate on that will be much lower than a credit card. An auto loan is typically much lower than a credit card. So the credit card is probably the highest interest rate type of loan that is available to most people. It's also psychologically easy to get addicted to spending because you just have this plastic card and you can just, if you're not careful, just keep spending and buying things, and you're not getting any immediate feedback on the balance that you're accumulating until whatever, a month later when you see the bill. So you can get psychologically addicted to just spending, because if you had a wad of cash in your pocket that you're spending, you can see it getting smaller as you spend the money. But with the credit card, you kind of lose that feedback and can end up accruing a pretty large, substantial balance without even realizing it. Some of the fine print and terms can be confusing, and the intention sometimes is to get you entrapped into high interest debt. So I gave you the example of these credit card rewards. So the credit card company will entice you with, hey, we'll give you 100,000 points if you sign up for this card, but you have to spend $8,000 in the first whatever 3 months. Most people don't have the ability to pay off the $8,000 right away. So what they're trying to do is to get you to spend $8,000 very quickly and then maintain that balance. And even though they're going to give you some rewards, uh, for many people, paying off that initial balance that they accrued to kind of get the credit card rewards in the beginning, they're just going to keep paying interest on that. And that's how the credit card company typically kind of makes up for giving you the rewards. So just be careful that the deals that the credit card companies offer is oftentimes to kind of get you trapped into the high interest debt trap. So you should only kind of accrue big balances on your credit card if you have savings and the ability to pay off the balance. Okay, so when you're shopping around for credit cards, what you look for? So obviously the interest rate that you're going to be paying. So the lower the rate, the better for you, because if you do end up maintaining a balance on the credit card, you'll end up paying less in interest. Some credit cards have annual fees. So aside from just the interest rate, there could be a fee that you have to pay, say $100 a year. And these are typically for higher end cards that offer you more perks. Um, so just watch out for that. Cash back percentage. So, as I mentioned, there are cards that will give you a percentage cash back for every dollar you spend. And so, looking at the percentage that's offered for that particular aspect of the card is important because they differ. Some will offer you 1%, some 2%, some will offer you, 3% on this category, like groceries, and then 1% on everything else. So, it's worthwhile to look at what the percentage cash back is, because, for example, if you eat out a lot, you might want to get a card that has 5% cash back on dining out, and you can just use that credit card for that particular purpose. So knowing the cash back percentage is a good thing to look at. The rewards and perks. So, some offer kind of an upfront bonus for signing up for the card. Uh, Higher end cards offer things like access to these travel lounges at airports. So if you're flying, you can get into these lounges and they have kind of nicer food and places to rest and take a shower and stuff. They also offer better customer service and other kind of benefits. The rewards for some of the higher end cards are better too, and the cashback percentages are higher. But you may end up spending on an annual fee or um, must have a higher credit score to even get the card in the first place. So that's kind of the trade off there. Uh, Signing bonuses. This is kind of related to the perks I mentioned. Insurance and other bundled features. So I kind of talked about this in the previous slide about how the credit cards offer a lot of consumer protections, including different types of insurance, fraud protection, seeing what your card offers, and customer service quality. Um, I would say that from my experience, I have a couple of different cards. I found that Chase has kind of the best customer service, but that's just anecdotal. So if you are looking at multiple different companies and Chase has a good option for you, I would at least try them out. I've had a pretty good experience with them. Okay, so here are some tips on how to have credit cards work for you and not have you work for the credit cards. Okay, so the first and maybe obvious tip is don't buy things you cannot afford with a credit card and to pay off your balance every month. So credit cards are on a approximately 1 month billing cycle. So you can use them interest free for a cycle and then pay them off. And so you can just set up auto pay. So money will basically be taken out of your bank checking account and will automatically pay off whatever balance is on your credit card. And of course, you need to be careful because if you only have $1,000 in your checking account and you've racked up a $5,000 balance on your credit card, then you're gonna it's gonna empty out your your bank account, and you're not even going to pay off the entire balance. So you gotta have some financial planning to be able to execute this, to make sure that you have enough cash on hand to pay off the balance every month. So that will just require you monitoring both your credit card spending and how much money you have in your checking account. The other tip is to not get suckered in by the minimum payments. So when you basically, let's say you spend $1,000 on your credit card, it may give you a minimum payment for the month of whatever, $50 or $100. And so you can basically stay current on your credit card by just making that minimum payment. But if you just keep doing that, you'll never end up paying off the actual debt because you'll just be paying interest. So, though it seems very tempting to be able to spend, $5,000 up front in month one and only spend $50 in that month and the next month and the next month after that, over time you'll just never end up paying off that original $5,000 if you just keep doing that. So just don't get suckered in by this trick of the minimum payments because you'll just perpetually stay in debt if you just pay the minimum payments. Also, this strategy of just paying off your balance every month will help you kind of build a credit history if that's something you're trying to do. You're using credit by using the credit card, but then you're paying it off and you're showing that you're able to kind of manage your debts. This way of using the credit card as a tool to establish your credit history is also pretty useful. So pick the cards that have the best rewards programs based on your spending habits. So some cards offer better rewards for certain categories like eating out or gas or groceries. So, there are some people that are really organized about this that will have multiple credit cards and like they'll put like a little label on each one that says use this one for gas, use this one for dining out. And so you can kind of maximize your cash back rewards by doing this. I personally just keep it simple. I have one card, which is a Citibank card that just gives you 2% back on everything. So, you don't have to over optimize if it's kind of a pain for you, but some people really like this and their personalities are just kind of tuned to be more organized about this. So, of course, it adds up to real money if you eat out a lot or you commute far and you spend a lot on gas. So it may be worth it, to save the whatever hundreds or even thousands of dollars per year by doing this. Upfront rewards, where it's like signing up for new card, you typically have to spend a lot in the first couple of months. So what some people will do is sign up for one of these cards that give you a really nice reward and prepay their car insurance for the whole year or prepay their home insurance for the whole year, or just whatever large payments that they make on a regular basis, just use the credit card to pay it up front so that they can basically get the rewards for signing up for the card. But the flip side of that is that they have usually the cash available to just pay it off. So even if they're spending $7,000 up front to get the rewards from the cards, they have that available in their checking account to just pay off the balance at the end of the month. So they're getting the reward from the credit card without basically keeping a credit card balance and paying interest. So you got to have your kind of financial life in an organized way and have the means to pay off the balance if you're going to play this game of accruing a large balance to get a credit card reward and then paying it off right away. You got to be able to pay it off right away for it to be worthwhile. Okay, so read the fine print, especially for cash advances, teaser interest rates, and rewards. So some credit cards will offer you a lower interest rate for the first whatever 6 months, and then the rate will go up a lot. So they may offer you, hey, like for the first 6 months, where the interest is only 3%, but then after 6 months, it jumps up to like 25% or whatever it is. So you got to make sure you read the terms carefully. Some cards offer cash advances, so I think nowadays it's not really super useful to get a cash advance where you can basically use the credit card like an ATM and get actual cash. Um, but now, I mean, for most things, you can just use the credit card directly to pay. You don't need the actual cash. So yeah, and the rewards. So like signing up for a credit card, wanting to get like this large reward up front, know what the requirements are to get the reward. And also, sometimes these cards have annual fees and whatnot. So you should just be careful and know what you're getting into by reading the fine print. Okay, and then I mentioned this before about how a lot of these credit cards have a lot of consumer protections and insurance built in, like travel insurance, auto rental insurance. So just reading the fine print can be helpful, so that what these perks are, and that if you ever needed them, you could basically call the credit card company and file a claim or do whatever you need to do to take advantage of the particular built-in protection. And then if you're in doubt, because these credit cards have certain features like the cash advance or balance transfers, and different things you can do with them. If you don't know exactly what you're getting into, then either try to clarify by searching online, or just it's better not to use it, because if you can't figure it out, then it may be just a complex trap to kind of get you accruing a balance and paying interest. So you should just be careful on features on the card that you don't clearly understand. And then finally, I'm going to make a separate video about this website, Doctor of Credit. It's basically a website that tracks credit card deals. And so it's a good place to start when you're looking to kind of start a credit card, or looking for new credit cards to open if you want to take advantage of points and rewards. So just wanted to at least put this on your radar and for you to check it out on your own time. But I will also be putting a video out, kind of walking through the website. Now, there's just a couple of other topics related to credit cards that I think are at least worth mentioning for you to do further research, in case they kind of relate to your specific circumstance. So, if you have existing credit card debt, there are a lot of strategies on how to consolidate these, and strategies for paying them off. So, this is a whole separate topic of, if you have a lot of credit card debt existing, how to pay that off. So debt consolidation, that's kind of related, where you can combine all your different credit card debts, and have a specific strategy and plan to pay them off. How to deal with collectors. I've actually never been in collections before on credit cards. So this is when you're behind on your credit cards, and there's basically the credit card company will sell your debt to some credit card collecting company, and they will pester you to try to collect the debt. So there are ways on how to deal with them. You can look on the internet for the best strategies on how to kind of negotiate with collectors. Balance transfer between cards. So if you're if you have a card that has a really high interest rate, and you're able to qualify for another one that has a lower rate, you can balance transfer between the cards. So the exact mechanics on how to do this, you should just look up and make sure you're clear on all the implications with the new card as well as the old, before you do it.